CMC now, that stock had a big run yesterday after earnings. Our Ramanan of CMC joins in to talk about its earnings, which went down very well with the street. Good morning, Ramanan. Thanks for joining in. The market liked the fact that your margins are beginning to improve and have improved quite significantly in the current quarter. A, do you think, given your changing business mix, this is sustainable? And what would be steady state margins once this whole transition is over in your eyes?
Yeah, thanks, Udayan. And we have been very pleased with the way CMC has performed during the last quarter and during the year. As you have been aware, during my interactions with you earlier, we have been stating that we are moving away from low-margin equipment or box-selling businesses into value-adding solutions and services businesses. And we have been targeting, an EBITDA margin of about 15% on an average. That was our stated goal during the beginning of the year. We were glad to find that towards the end of the year, we closed our EBITDA margins at about 16.6%. And overall for the year, we closed it at about 13.4%. And it has shown a steady growth quarter on quarter. We also recorded the highest PAT during this year, as well as in this quarter. These are all a result of the conscious focus and the strategies that we have been adopting into moving into value-adding solutions and services and defocusing away from equipment business. Of course, defocusing from equipment business had its own impact in terms of a drop in revenue, but that was expected, and that was something which we were conscious of as we thrust into the strategies for this year.
Mr. Ramanan, you don't give a specific guidance, but if you had to call the next year, what would you say you were looking for? Some kind of flat growth levels, a marginal increase, a marginal decrease, or a sizable improvement because of your change in product mix?
We are looking at growing both in revenue as well as in margins during the coming year. And the reason is we don't have that much of a large international base to begin with, and therefore there is a lot of scope for improvement for CMC in the international sector. We also have just started penetrating the private sector in India, and therefore there is a good room for improvement there too. In addition, during this quarter, we have about 16 new clients whom we have added. So we do hope that some of these clients, including some of the large deals that we won along with TCS, in synergies with TCS, will start bearing fruit during the coming year. So we don't give a forward outlook, but we are cautiously optimistic about CMC's opportunities as well as its growth potential during the coming year.
Can you just give us a little bit more clarity on the details of the solutions business, which is now 3/4 of your revenue? At what pace is it growing, and what kind of margins does that part of the business operate at, stripped of the equipment business?
The solutions business and the solution services business, particularly the SI business, has grown quite a bit, and we are operating close to about we are operating at industry or better than industry margins at about 28 to 31% in that area. We are also growing well in IT-enabled services and digitization services, which has also shown good growth. And in both of these, it is being triggered by growth in banking financial services sector as well as ports and cargo sectors for both these SBUs.
Thanks very much for stopping by and speaking with us today. That's CMC, yesterday moving like a rocket, up almost 45%. Today as well, firm enough in trade, up almost 11.5%. From